Hi everyone, welcome to today's trade of the day, and for today's trade of the day I will be looking at gold. Right, this is gold against the US dollar, against the backdrop of the US elections. It will be interesting to know how a safe haven like gold would actually perform. So what I have here is gold on daily. Now, very interestingly, gold is in the downtrend, right? How we know it's in the downtrend is because in the downtrend, markets tend to make lower lows, high, lower highs. So we have a high here, we have a low here, all right? And we can see that the market makes subsequent lower highs. And then, of course, we have lower lows and followed by subsequent lower highs. Okay, so if we were to connect all the lower highs, all right, and draw a sort of a trend line, by tapping as many candles as possible, but without cutting the candle body, okay, we see that gold really is in a downtrend, right? With the recent candle, today's candle, reacting below the downtrend as well. So very quickly, how far do I think gold would actually drop? There are a number of ways of seeing how far gold should drop. Okay, is that, right, we can actually take the graphical low, the recent swing low here, change this to support. Okay, and if we look to the left, this was a level that gold has tested multiple times in the past, once in August, once as recent as September, and once at the end of October. Alright, so this is quite a good strong support level, and if anything, we can expect price to drop down towards this level. Now, what this then means is if gold is dropping, it means that there is a capital flight from safe haven, so you should see the S&P go further higher, and that would therefore then mean that there is a higher chance of President Donald Trump winning his second term in the US elections. All right, because we know that Trump has always been throughout his 4 years of presidency, he's always put a lot of focus on the stock markets, right? But technically speaking, this is the picture for gold. And if we have our daily target, let's go down to the lower time frame to look for our entry and our stop loss. So what we have here is the 4 hours, right? Of course, the trend line still holds really nicely, so we can just keep the trend line. All right, I will extend this to more recent price, okay, and probably back it up to this level here, right? So we can actually see that two ways, right? We see that price has made a sort of a zigzag manner up to here, so we can actually use Fibonacci extension to project how far down price should go. Right, so using Fibonacci extension 0.1, 0.2, and 0.3, and we open all Fibonacci ratios, and we see that this level is actually pretty close. The recent swing low is actually quite close to the 78.6 level, so we can highlight a 78.6 level and draw a zone. Right, so this can therefore be a target, right, a target area. Okay, now at the same time, okay, this confirms our target. We are actually looking for an entry, right? So for an entry, we are going to have to go down to the 1 hour, but before that, all right, very clearly, we'll put the stop loss at the recent swing high and back it up a bit. Okay, so this would be the stop loss level. Now, look, you guys might probably think why I just picked a random recent swing high level as a stop loss, right? This is not random at all. There are two reasons why the stop loss is here. Firstly, if price were to break above the trend line and even above the stop loss, now the stop loss is the level that we know for sure our trade is wrong, right? So if price breaks above and closes above the trend line, we will know that price is not in a downtrend. Secondly, by backing up the stop loss, this actually gives the trade a bit of room to breathe. You see how big this spike is, so you know that volatility in the time of something as important as the election, by giving your trade a bit of room to breathe, you're actually protecting yourself by not letting your trade be prematurely stopped out. So for these two reasons, okay, the stop loss is here. All right, and let's go down to the 1 hour to look for an entry. Okay, so for an entry, right, we see that price has recently just started off from here. Sorry, a moment, let's go down to the 1 hour. Okay, we see that price actually started off from this high, right, and then it pushed all the way down before bouncing up. So we can actually use a Fibonacci retracement from the recent high to the low open all Fibonacci ratios. Okay, and we can actually see that price is actually testing and holding below the 61.8. Interestingly as well, our negative 61 is in the daily zone for our take profit. Okay, so we have a 61.8 and we'll highlight the negative 61. Okay, so we have these two levels. This therefore can be our buy entry. We can actually wait for price to come back to this level, and sorry, this becomes our sell entry. Okay, so we have a sell entry, okay, down to this take profit. Now of course we can sort of protect our profits, okay, by having a partial take profit at this level. Now we put a partial over there at a recent swing low at a spike, so as to protect our profits. When price drops down to the partial, we can actually move our stop loss to break even, and this actually ends up protecting our trades. So I'm going to zoom back out to 4 hours because 4 hours the presentation seems the best. Okay, and this is really how we will and we should be playing the gold on an intraday. Alright, so thanks everyone for tuning in to today's trade of the day. Wish you guys all the best, trade safe and stay safe. Take care.